Ever wondered where money comes from? How does a piece of paper or a number on a screen hold so much value? These questions have perplexed many throughout history, and today we're going to shed some light on them. Welcome to the fascinating world of money creation. Money creation, simply put, is the process by which money is introduced into an economy. There are two main methods of money creation: physical printing and digital creation. Physical printing, as the name suggests, involves the manufacturing of paper money and coins. Digital creation, on the other hand, is a more abstract process, where money is created electronically, such as through bank lending. Both methods are integral to our economy and play a crucial role in determining the value of money. But how exactly does this work? What are the mechanisms behind these processes, and how do they affect us on a daily basis? In the next few minutes, we will demystify the process of money creation. Money isn't just printed out of thin air, there's a process behind it. Let's delve into the intricate steps that go into creating that dollar bill in your wallet. The production of physical money involves two main entities: the Treasury Department and the U.S. Mint. The Treasury Department is responsible for the design and printing of bills, while the U.S. Mint handles the creation of coins. Bills start their life in the Bureau of Engraving and Printing, a division of the Treasury Department. The process begins with large sheets of paper, made from a blend of cotton and linen to ensure durability. These sheets are then engraved with the bill's design using a process called intaglio printing. This involves etching the design onto a plate, which is then covered with ink and pressed onto the paper, creating a distinct texture. Once the bills are printed, they're not quite ready for circulation. They undergo a thorough inspection process, where advanced machines check for any defects or inconsistencies. Bills that pass this rigorous quality check are then cut into their individual sizes and bundled ready for distribution. On the other side of the coin, literally, is the U.S. Mint. The process of minting coins begins with large coils of metal which are fed into a blanking press. This punches out discs known as blanks. These blanks are then heated to soften them, cleaned to remove any oils or dirt, and then struck by high-speed presses to imprint the coin's design. But how is the value of this money determined? It's not the paper or the metal that gives money its value, but rather the trust that we place in it as a means of exchange. The value of a currency is largely determined by economic factors such as supply and demand, inflation, and the economic stability of the country issuing the currency. So, that's how physical money is created. But what about the money in your bank account? Most of the money in circulation isn't physical, it's digital. Now, let's explore this a little further. The truth is, banks are the main creators of new money, and they do this every time they issue a loan. Imagine you walk into a bank and apply for a loan. The bank doesn't reach into a vault and hand you a stack of cash. Instead, they simply type some numbers into your account. These numbers represent the amount of your loan, and just like that, new money is created. But it's important to remember, this money didn't exist before. It's not transferred from another account. It's brand new digital money, created out of thin air. Now you may be wondering, isn't this a bit risky? What keeps banks from creating unlimited amounts of money? Well, that's where the central bank comes in. The central bank puts regulations in place to control the money supply. They set the rules for how much money banks can create. This is done through a mechanism known as the reserve requirement. The reserve requirement is the minimum amount of money that a bank must hold in reserve compared to the amount of money it has loaned out. For instance, if the reserve requirement is 10%, for every $100 a bank loans out, it must have at least $10 in reserve. This ensures that banks can't create money without limit and helps control inflation. So, when you look at your bank account and see those numbers on the screen, remember that they aren't just abstract figures. They're a representation of the money that's been created through the process of lending. It's a fascinating system, and it's at the heart of how our modern economy functions. So the money in your bank account is essentially just numbers on a screen. But these numbers have a real impact on the world around us. They fuel economies, fund dreams, and drive the financial systems that underpin our daily lives. The process of money creation has a profound impact on our economy. Let's take a closer look. When money is created, it can stimulate economic growth. Businesses can borrow more, invest in new projects, hire more staff, and generally contribute to the economic wheels turning. However, it's not all sunshine and daisies. If there's too much money floating around, we run the risk of inflation. Prices start to rise, and your dollars may not stretch as far as they once did. That's where monetary policy steps in. Central banks, like the Federal Reserve in the United States, use monetary policy to keep a healthy balance. They control the money supply, steering the economy away from the rocky shores of inflation or the doldrums of economic stagnation. Through interest rates and other tools, they nudge the economy in the right direction, keeping our financial ship on a steady course. Understanding how money is created helps us understand the complex workings of our economy. Let's take a moment to recap what we've learned about money creation. We started our journey understanding the physical process of money printing. This is a fascinating process, involving a series of complex steps from design to distribution. We dove into the world of engraving, printing, and inspection, all to ensure the money in your wallet is secure and trustworthy. Then, we ventured into the digital realm. We explored how banks create money not just physically, but digitally as well through loans and credits. This virtual money, though unseen, plays a vital role in our economy and everyday transactions. We also discussed the impact of money creation on the economy. It's a delicate balance, with the potential to either stimulate growth or trigger inflation. So, there you have it. Money creation, both physical and digital, is a complex yet fascinating process, impacting our lives in ways we often don't consider. Next time you look at a bill or check your bank account, remember the intricate process that goes into creating that money.